This session has been specially arranged on request by many of our members who want to touch base upon the schemes that SIDBI is offering. So how we'll proceed with this session is like this. Mr. Manish Kumar will give you an overview of the current situation of the MSMEs and how banks are helping them circumvent these current crises caused by the pandemic COVID-19. We will also try to touch base on schemes like SIDBI's assistance to facilitate emergency response against coronavirus, the Safe Plus scheme, which has been introduced, which intends to meet additional working capital requirements, the SPEED scheme, which is a scheme for purchase of equipment for enterprise development, the Krisidex scheme, the Swavlambam Mela, Mr. Manish Kumar will be touching upon. Besides, we'll also try to touch upon the schemes which are available for the solar, the Pratham, the Mudra scheme, the Stand Up India scheme, the CGT MSME, and the NCGTC schemes, and also TREDS. So welcome all to this session with Manish Kumarji from SIDBI. I welcome you, sir. So please, let's hear from you. We are all waiting to hear from you.
Thank you, madam. I hope I am audible. I hope I am visible, clearly visible and audible to all.
Yes, sir.
Good afternoon, everybody. On this special occasion, I would especially like to thank MCCIA for organizing this meet so that a proper flow of information can take place. Although in the COVID-19 era, we could not replace the physical meeting between the promoters and the bankers, but certainly technology has to be used and used in a fashion that we can make the maximum out of it. So I would request participants to please put up your queries, put up your doubts, put up your questions through chat, which Manjari madam would be accumulating, and we'll be touching upon all those aspects which the entrepreneurs want to know about. But basically, to keep the ground rules for the meeting, I have structured the meeting in such a way that we try to cover as many aspects as possible within the limited span of time. So basically what I have done is, initially we will talk about the MSMEs, the impact of COVID-19 pandemic on MSMEs, what has been the response of the government to this, and how SIDBI has tried to put in the, try to plug the gap which has been created out of this COVID-19 pandemic. To begin with, it's a fact that MSMEs have been very largely affected by COVID-19 pandemic. Now, what are the impact of COVID-19 pandemic? The MSMEs which were doing okay prior to this period, facing major issues. What are the major issues? I don't know. I've tried to capitalize it, but maybe the MSMEs, the entrepreneurship themselves would be, entrepreneurs themselves would be able to add to the problems they are facing, because you have to really you have to really experience to come out of the problems. I cannot actually state the problems, but I can certainly visualize them. One of the important aspects which has been impacted by COVID-19 is the break in the working capital cycle. The break in the working capital cycle of the MSMEs has basically resulted in not only piling of the receivables, but also piling up of inventories. Then the second thing which has been impacted is the suboptimal utilization, capacity utilization, and that has been largely on account of lack or insufficient demand. Now, in the face of it, the entrepreneurs have to incur the fixed cost. They have to pay the electricity bills, they have to pay the rentals, they have to pay the, the minimum fixed cost to keep the concern going. So on the one side, one is hit by the receivables. On the other side, they are impacted by low, the cost aspect of which cannot be postponed. So basically what has happened is, if we try to analyze the MSME position, at best, they, it is assumed that they have enough cash to basically wait out the lockdown period for say 2.5, 2 months, 3 months. That's the maximum a unit can maybe endeavor to keep the unit going. But beyond that, it is certainly difficult. Now, the problem is furthermore complicated by the migration of the laborers. Now, once we decide to restart the unit, we have to face the problems of finance, we have to face the problems of how to keep the production cycle, how to restart the production cycle, how to restart the working capital cycle, and how to really basically also organize infrastructure factors, including that of the labor. I think this more or less sums up the exact scenario MSMEs are right now facing. Maybe I may have missed some of the points which I would like the participants to basically highlight during the course of the meeting. Now, if we analyze the position with regard to MSMEs in India, one of the major issues which from the banker side, or maybe from the policy angle, or from the government side, it is seen that most of the part of micro units are still unregistered. Although it facilitates the micro units in lesser payment of taxes or maybe lesser regulatory requirements, but the flip side of that is that in a situation like COVID-19 or a similar situation, it becomes very difficult for the authorities to reach to those MSMEs. This we have experienced from the other side. So in the nutshell, what I am trying to emphasize is that COVID-19 has certainly impacted the scenario, and how do we overcome this? See, the punchline, of course, continues like it is an infection or a which is likely to stay. If it's likely to stay for a longer period, it needs to be managed and managed with precautions. Obviously, the precaution side we need to take care while restarting our units, but at the same time, the basic problems which the MSMEs are right now facing have been to a very large extent addressed to by the government during the various announcements made by Honorable Finance Minister, and that too has been elaborated during the Atmanirbhar Bharat, which was subsequently launched by the Government of India. Now, coming to the various steps which the government has launched, one of the most important aspects which the government has covered is that they have addressed the long pending demand of micro, small, medium enterprises with regard to their definition. It was always said that the definition was too limited in the sense that it does not cover the entire working aspect of the unit. So the government has now modified that definition, and they have basically removed the distinction between a manufacturing and the services unit. Now simply micro, small, medium enterprises have been defined based on your investment in capex, that is the main plant and machinery equipment, and the turnover. And the ratio which has been kept is 5 times. Suppose if a micro unit is there, then investment cap which has been kept in plant and machinery and equipment is 1 crore, and the turnover which has been kept is at 5 crores. Similarly, for medium enterprises, the cap is investment in plant and machinery till 10 crores, and this turnover has been kept at 50 crores. And for the medium enterprises, it is 50 crores and 250 lakhs. So they have 250 crores, sorry. So they have basically, what this has done is that it has widened the scope of micro, small and medium enterprises to be covered under that ambit, and to become eligible for the various various programs which is being launched by the MSMEs, or various schemes which the bankers come out specially meant for MSMEs. So this is the first major uh, major announcement made by the government. Now, apart from this, the government has tried to address the working capital cycle issue, the issue of receivables, and they have tried to come out with an auto loan sort of a concept wherein three loans up to the extent of 3 lakh crores have been announced by the government of India, which would be covered under NCGTC. So the MSMEs who are already availing finance from certain banks, financial institutions, whatever is their outstanding as on February 29, 2020, correct? February 29, 2020, they become auto eligible for a loan amount of 20% of that outstanding. So, but the conditions which have been imposed is that the loan outstanding as on February 29, 2020 should not exceed 25 crores. And the turnover of the unit should not exceed 100 crores. So if a certain unit is eligible under these criteria, it becomes auto eligible for a loan to the extent of 20% of your outstanding as on February 29, 2020. So all the banks and financial institutions have been asked to approach the MSMEs and ask them their requirement, and based on that sanction those loans so that they can avail those loans for primarily relating that loan to the working capital requirements. This may include payment of salaries, and wages, then your small capex like restarting the unit. So whatever was the gap which was created to restart the unit, whatever is the expenses to restart the unit, to partly take care of the fixed cost expenses which we discussed earlier. So this scheme is an auto sanction loan sort of a concept wherein the MSMEs can take advantage of this scheme so that they can restart their unit. This is one of the important announcements made, and all the banks have already started working on it. And in a span of very few days, I think 3 or 4 days, sufficient. I think something that what I last heard was like 22,000 to 23,000 crores have already been sanctioned. I don't know, Friday and Monday. Today, this figure might even jump up more. So what I'm trying to emphasize is that the main issue, which was with regard to restarting your unit after the lockdown, gets addressed to this. And you should always approach your bank and financial institution from wherever you have availed the loans to take advantage of this scheme. And this scheme is to be covered under NCGTC, so no additional collateral is required for this loan. No additional collateral is required for this loan. Whatever is already hypothecated and mortgaged by you to the bank, based on the same security, this loan is to be extended. And the best part of it, that the apprehension of the bankers, that their apprehensions in the form of additional security has been taken care by way of NCGTC. Those loans are guaranteed under that particular arrangement. So this is one of the important schemes which have been announced by the government of India. Moving on, the government has also announced the creation of 20,000 crores for subordinated debt. This is basically subordinated debt, as you understand, is basically quasi-equity. Quasi-equity, like at most of the times, whenever you are going in for project expansion activities, a part of the total finances is to be brought in the form of your promoter's capital. That this particular subordinated debt shall rank as a part of promoter's contribution to the entire project. Under this scheme, emphasis has also been made to address units which were facing liquidity position and were already in special mention account category 1, 2, or even NPA on account of these factors. So this particular fund is to be used to revitalize, to restart those units, MSME units, so that they regain their original position and come back to the position which they earlier used to enjoy. And since this is a quasi-equity product, it has a long gestation period in the sense that there is a moratorium on principal repayment. And I'm just trying to tell you the concept of it, although the guidelines or the specific guidelines to be followed in this regard are still awaited. Another important aspect which has been covered by the government is to take care, especially to take care of the startups. What the government has done, that they have come out with 50,000 crores of fund of funds. SIDBI, as you know, is already managing that fund of funds for, and the concept behind it is that fund of funds invest in your daughter funds, like smaller funds, and those smaller funds invest in startups. So an amount of 50,000 crores, out of which I think 10,000 crores have already been released to take care of the financing part of startups. Apart from that, of course, the government of India has also made certain relaxations with regard to your insolvency and bankruptcy code, wherein IBC, the limit of IBC has been raised from 1 lakh to 1 crores in term for MSMEs. So any loan which is outstanding up to an extent of 1 crore is not to be covered under IBC. So they have given that comfort also. So I mean, the approach to the entire situation is like to give the maximum elbow room to the MSMEs to come back to the position they were enjoying prior to this COVID-19 period. So apart from that, the government has also given relaxation or extended the time for your ITR returns and various other corporate regulations under the Companies Act if you happen to be a private limited company. So basically, the approach of the government of India is to assist MSMEs from the financing side, from the regulatory side, from your addressing your liquidity position. This is how the approach has been towards addressing the entire problem. Although I still understand that the demand part of it and the capacity utilization part of it is something which we need to discuss further, which we need to know from MSME promoters how exactly the situation is shaping up, so that if other schemes or other interventions are required, the same can be assessed from the policy angle and can be taken care of. This is what I had decided to discuss about the current situation arising out of COVID-19 and the various steps which the government has come out with. Now, moving on, as you are aware, Small Industries Development Bank of India, SIDBI, is a developmental financial institution, correct? So our role is term lending. Basically, what we do is term lending in direct finance. Initially, SIDBI was, as you know, have been formed out of the SIDBI Act 1989, and subsequently in 2000 it was made completely independent, and now it is basically addressing the issue with regard to promotion, development, and financing of MSMEs. So we have got a three-pronged approach which is mandated to SIDBI, which is basically covered in the SIDBI Act, that how we promote, develop, and finance. So promotion, development, and financing of MSMEs, and SIDBI, as for that, has various verticals which can broadly be classified into direct credit vertical, indirect credit vertical, and your promotional and developmental activities. So direct finance, we have got branches in approximately all the industrial clusters in the entire country, through which SIDBI basically caters to the direct credit requirement of the MSMEs. So we have launched various schemes on which I'll be touching upon in the later part of my address. And basically what I'm trying to say is, direct finance is approached in this manner. Indirect finance is by way of your finance to various banks and various financial institutions, NBFCs, which are basically engaged in the similar activity. So one side it is direct finance, second is through banks and financial institution also. SIDBI finances and refinances the banks and financial institution, which in turn finance the MSMEs. So the entire arena is leveraged upon, so that the maximum MSMEs can be reached out to. So promotion and developmental activities, of course, we organize various entrepreneurship development programs. We launched that PSB 59 minutes, PSB loan in 59 minutes. That entire architecture was developed by SIDBI and subsequently used by the entire banking and financing structure. So basically SIDBI's role is to see where the gap exists and how do we plug that gap. Now we have also expanded our role as far as CRISIDEX. CRISIDEX also is a barometer sort of a literature which basically analyzes the position which has happened in the previous quarter and what is the likely position to happen in the coming quarter. So that's a pulse basically of the MSMEs in India. So then we also have positive interventions in the field, like Madam Manjari mentioned about Swavlamban Mela. SIDBI basically not only addresses from financing angle, but also tries to take care of the demand side, real micro units or the village level units, wherein we try to provide a platform, try to create a platform between the buyers and the MSME sellers, so that the products are properly displayed and with the minimum financial impact on MSMEs. Apart from that, SIDBI has launched various, trades also. Trades, if you're aware, receivables have been one of the most impacted, also, in fact, the most important of the problems which is faced by MSMEs. So how do we address that problem? So what SIDBI has done, SIDBI has launched the TREDS also, which is Trade Receivables Engine. Basically, it's a platform which connects which has a three-way connect, in the sense that banks and financial institutions are on the one side, then the suppliers are on the other side, the buyers are on the other side, the suppliers who supply the components or the product to the upside of their chain, raise their bills, those bills are uploaded in the system, and the bankers and the financial institutions basically see that invoice and discount it, so that whichever banks takes up the bill for discounting, that is discounted, and the money is immediately paid to the supplier. For this, basically certain arrangements are made, and those arrangements and the documentation is to be followed before actually we can get into this operational modalities. Now, since I am addressing you from the SIDBI's branch office, so I'll be focusing mainly on direct finance. So now we can at this stage bifurcate the direct finance interventions of SIDBI as a schemes which normally take care of your financing needs, and schemes which are specifically formulated to take care of the COVID-19 impact. So talking about general schemes first, see, SIDBI came out with a 10,000 crore fund, which was the SMILE, that Make in India fund, which we launched. And in fact, that particular fund is already exhausted. And depending upon the availability of funds, we do take up cases, but that is in a very limited fashion. Now, the maximum which is being leveraged upon is a scheme called SPEED. This is basically SIDBI loan for purchase of equipment and enterprise development. This is a very good scheme. In fact, this scheme was launched in 2019, and a short span of 1 year, the scheme has taken up in a big way. See, any unit, existing unit, which wants to go for expansion, which has the requirement for expansion and want to basically acquire machines into their fold, this scheme basically caters to their need. See, under this, what is the USP of that scheme? See, whatever 100% financing is done up to a certain limit. There is no promoter contribution. Suppose a unit A engaged in a certain activity wants to expand and acquire a machine. That now, if he approaches, the normal financing route, he has to raise the promoter's contribution of at least 30-35%. Then he has to, he gets the loan for 65 to 70%, then arrange for additional security. So what SIDBI has done is, we have come out with a scheme wherein the entire cost of the machine can be financed up to the 100% of the cost. And the promoter's contribution, whatever promoter contribution is normally required, like 30%, that you deposit with SIDBI in the form of FD, and that FD will be the security for that particular loan, and no additional security is required. What are the benefits of this scheme? The benefits of this scheme is that you need not switch banks. You need not worry about security. Your promoter contribution continues to remain with you. You earn an interest on FD, and you pay. That financing is done at a very competitive rate in the range of 9.25 to 10%, depending upon the rating scores of that particular proposal. So this particular scheme has come up in a very big way. The only catch here is that SIDBI has entered into MOU with certain original equipment manufacturers. But in a place like Pune, we have taken care that most of the original equipment manufacturers having impact in the region are covered. Like, for instance, Lokesh Machines, Jyoti CNC, Milacron India Private Limited, Ace Designers, Bharat BFW, Bharat Fizwerner, Harco India, Bartley Boy, etc. I mean, this is just an illustration. We have tried to cover maximum OEMs under this scheme so that the expansion requirement of MSMEs is taken care of without actually impacting their requirement for either promoters' capital, promoters' contribution, or security angle. This is one, and the maximum which can be given under this particular scheme for new to SIDBI customer is 1 crores, and for the existing customers it is 2 crores. So I have already covered the rate of interest, and the normal tenure of the loan is 2 to 5 years with a moratorium of 3 to 6 months. This is speed. Now, for previously, what used to be the position was like SIDBI was basically with the manufacturing unit. So the retail trade or the wholesale trade activity was left out. So SIDBI has now launched the retail loan scheme for trade finance also. The features remains more or less the same, but it is towards the working capital requirement of trading units, especially the wholesale unit and your franchisee units. There here also 100% of the capex or working capital requirement is taken care of. It is very quick dispensation, and it is also based on the requirement of fixed deposit, and no promoter's contribution is required. The only thing is that the unit should be in operation, and this applies for speed scheme also, that the unit should be in operation for 3 years and should be in cash profit for at least 2 out of last 3 years. In retail loan scheme, it should be in cash profit in all the 3 years. Again, it covers your requirement like business premises, go down, shop, office premises, repair, furnishing, renovation, of existing business premises, purchase of furniture, fixtures, equipment, tools, and working capital and additional working capital requirement, OD facility, etc. So, and the rate of interest ranges between 10 to 11% under this scheme. Now, catering to the manufacturing unit, the electricity bill or the electric power depending upon the power intensive units, most of the units today go for launching of solar panels. So to cover that particular aspect also, SIDBI had launched a scheme called STAR, which is basically SIDBI term loan assistance for rooftop solar PV plants. See, it should be for captive use. It should be installed in the same premises where the unit lies. And even in this scheme, 100% of your requirement is covered and is again, it covers from 25 kilowatt to 500 kilowatt requirements, and loan amount from 10 lakhs to 250 lakhs for installation of those solar panels. Here also the concept remains the same, that you need not give any collateral security. It is again based on FD. 100% of the total cost of the project is covered under the scheme. Right? These are basically the general schemes I am talking about, and the rate of interest again varies from 9 to 10%. Now, moving on from general schemes to these particular COVID-19 related schemes, as we talked about the particular line of credit, the general emergency line of credit which the government has announced, SIDBI has for its own customers launched scheme called Twarit. We have already issued offer letters to our customers. We have received the interest letters also from customers. We have in fact sanctioned loans under this particular scheme, wherein no additional collateral security is called for, and 20% of whatever is the outstanding as on February 29, 2020 are sanctioned as loan to cover the working capital requirement, especially arising out of in the COVID-19 situation. Apart from that, SIDBI has also launched schemes such as SAFE and SAFE Plus. SAFE is basically a scheme which is meant for units which are into production of pharma units, or maybe units which are into production of COVID-19 related basically equipments which are used in COVID-19 related activities, such as your mask, your face mask, face shield, your sanitizers, or it covers a lot of equipments. And this particular scheme, under this particular scheme, SIDBI has had allocated rupees 175 crores, which as of now stands utilized, but the funding has been done at a rate of 5%, so that the shortfall of these particular PPE kits, face masks, face shields, sanitizers, even what do you call these disinfectants used in the fight against corona, if those items are produced, this particular lending has been done. And under SAFE Plus, we have also correlated to the demand which the government of India or the government related institutions have raised on those particular units, and the quantum of loan under that particular line of credit has been raised to 1 crore also. So on the one side, it is the general schemes of SIDBI. On the other side, it is COVID-19 related schemes. So this is basically, this was how we as SIDBI has tried to approach the entire scenario. Of course, the inputs from experienced promoters like you are always welcome, so that we can further improve on the deliveries, so that the real issues get addressed. Manjari madam, if you could now talk about the various queries which are raised by the entrepreneurs, so that we can address them one by one.
Thank you, Manish Kumarji. That was a very extensive viewpoint on the various schemes that you have touched upon. The time, of course, is always going to be a shortage, and the queries are many. So I'll take up the first query. I'm clubbing, a few people have put up this query. Most of the MSMEs, they bank with cooperative banks. A few of them have accounts in private banks, and some on with the multinational banks. Now their query is the schemes extended, what various schemes announced by the government are not dispensed by these cooperative banks or the private banks. So under such circumstances, what do they do?
Uh, this is a very valid point. In fact, many of the promoters have also contacted SIDBI that these particular institutions are not aware of the particular arrangement which is being made under that particular line of credit. But basically, see, this particular scheme has been 3 lakh crores of liquidity infusion which the government of India has come out is a scheme in itself which is being conducted through the guarantee which is given by NCGTC, that's National Credit Guarantee Trust, correct? So basically what is done is those banks and particular institutions will have to get in touch with NCGTC so that they are covered under particular under that arrangement. MLIs, which we call in CGTMSE, member lending institutions, and then only those particular cases sanctioned by them can be covered. As such, they can also take an independent view on the issue and address the various requests or the applications received by them.
Okay. So there is another question. How do we apply for quasi-equity scheme?
See, madam, actually, the quasi-equity product is always linked to your project. So, suppose if you're banking with Bank A, then it would obviously be easier for that particular bank to basically appraise your requirement vis-a-vis the subordinated debt. See, subordinated debt or quasi-debt, this particular product was there in SIDBI for, I think, since 2014 or 15. We have been financing. See, what the quasi equity product does is it increases the leveraging ratio. Suppose if you are raising a promoter contribution of say 1 rupee, you are eligible for 3 rupees of bank loan. So that raising of 1 rupee sometimes becomes an issue. So this quasi equity product becomes a part of your promoter's capital, which increases the leveraging ratio and the quantum of bank assistance which you are eligible for. So obviously the institution from where you are approaching for your further project would also address your requirement for subordinated debt. Although a special corpus of 20,000 crores have been addressed by the, established by the government of India, that is a conceptual part I am explaining, but still the nitty-gritties or the final parameters of the scheme have not yet reached us, but it is obviously on the way. And from the reading of it, it appears that it would cater to the SMA 1 special mention account 1, 2, and NPA, those NPAs which have been recently, those accounts which have been recently converted into NPAs. Now you will say that I want to revive this particular unit. This is the project plan I am having. This is my requirement to revive this unit. X amount is the requirement. Then the banker would say this is going to be a promoter's contribution. This is the maximum loan amount which can be given. Then the promoter contribution, you say I have a difficulty in raising of that particular promoter contribution. A part of it can be taken care of by this particular product. So this is how the entire arrangement would work.
Another question is Safe Plus scheme only for manufacturing units?
Yes, ma'am. SAFE scheme was launched only for manufacturing. It did not cover the trading activity. If you are, but suppose if you are trading into a particular pharma equipment or maybe medical equipment, and you wanted to expand, I mean, you have backward integration, and you wanted to manufacture those products, then that particular arrangement could have been covered under this particular SAFE scheme.
Okay. I'm again going to club up 3 different questions into one question. One is the people who are into food business, restaurants. How do they avail the benefit of the CGT SME scheme? That is one. Similarly, people, the travel agencies are also very badly hit. How do they avail benefits? And an engineering consultant company, how do they avail of the business loans?
Business loans, ma'am?
Yeah, working capital, I think, is what the gentleman means.
See, basically, what I understand from the questions is that the entrepreneurs are basically trying to raise the query with regard to the expansion plan, I believe. If the expansion plan is there, it would be covered under general lines of credit. If you're starting, if you're basically required for restarting your unit, which was stopped, your entire production of the business activity is stopped, be it a hotel or a restaurant. See, hospitality industry is one which everybody understands will take some time to once again come up the way it was functioning pre-COVID-19 era. But these schemes do not differentiate between the hotels, restaurants, or the food joints. The only thing is that it is a auto sanctioned loan as far as restarting of the unit is concerned. I'm talking about the 3 lakh crores of emergency line of credit which the government of India has sanctioned. It simply says 20% of whatever your outstanding was with a particular bank or the entire outstanding with all banks and financial institutions on February 29, 2020, you become eligible for 20% of that loan. And subject to the condition that your entire outstanding should not be more than 25 crores and your turnover should not be more than 100 crores. So this is particularly related to COVID-19. But if the entrepreneurs want to know about the future project plans, then it would be covered under the general credit schemes of the bank or the financial institution.
Sir, we are not differentiating between the businesses, right? Like if somebody wants to start a jaggery business or some trading in another, so that schemes lending would be generalized and based on individual requirements, right?
That's right, ma'am. Because any expansion plan would continue to be examined on the viability aspect of it. One of the participants had raised queries about engineering concerns, I believe. So engineering concerns, basically, it does not differentiate between the line of activity, although the schemes may differ.
Yeah.
If you are going in for expansion, obviously, then if it's not a manufacturing unit, then normally the tangibles which are created in a particular business activity would not be the same as compared to the manufacturing unit. So obviously, it cannot be judged or examined from the parameters which are required to be addressed to for the manufacturing unit. The parameters are different, the schemes are different, the eligibility norms are different. So they need to be examined differently.
Okay. Sir, I'm going to read out a question which was sent to me by Mr. Shinde from Shri Refrigeration. They are an MSME with banking relationship with SIDBI. They are also the recipient of the venture capital investment from Maharashtra Defence and Aerospace Venture Fund created by SIDBI and MIDC and managed by IDBI Capitals. They are keen on getting the COVID venture investment. So how can they get it and whom they need to approach for the same? They have signed a term sheet, almost completed secretarial and financial due diligence for the MDAVF investment. And their queries, can the same credentials be sufficient for the COVID venture fund? They have received a 147 crore order for supplying to Indian naval project.
Can you repeat the name of the firm and the promoter?
Shri Refrigerations. They are from Karad.
Shri Refrigerations. And Shri Refrigerations, I think we have already forwarded the offer letter to the promoters, I think.
Okay.
Shri Refrigerations, we have already forwarded the offer letter. Have they received the offer letter? Again, if they are eligible for COVID-19 relief, that would be 20% of their outstanding.
Okay.
In the emergency line of credit. No additional requirement is there. But of course, if they are talking about the pending orders and the pending expansion plan, that can be taken care of in the general line of credit. but they will be eligible for whatever is the outstanding, 20% of that outstanding as on February 29, 2020. 3 refrigerations I know is one of our customers.
So again, there are a couple of people who are asking questions on the solar projects.
Okay.
How do they go ahead and avail of these?
See, madam, they simply need to approach us. They can approach me over mobile or email, or they can come to our office at Kakre Business Icon, 3rd floor, that is near E Square in Shivaji Nagar. They can approach us. We will be there to evaluate their proposals. No issue.
So, is there any phone number you want to share which they can call and pick up for some contact officer's name?
Yeah, you can get in touch with, I think they can get in touch with me only. You can give them my mobile number. There's no issue. 99042
Okay, I'll just type it out, sir. If you can repeat it,
99042
042
99042
yeah
33368 33368.
Okay. Triple. Okay, I'll just put this across so that
and they can also visit our website, madam. That's www.sidbi.in. There also they will have the details of the contact details and also the scheme details also. Whatever scheme which fits in best. Maybe some schemes may have, I mean, as I told you that Smile and Safe scheme, the allocation has already been, that is already full. So apart from that, they can always visit our website also.
Okay. So somehow I'm not able to, my chat is not going through. I'll just post them the address, your contact details eventually. I think we have time for a couple of more questions. So we have a question sent by Mr. Gurmeet Singh. He says, while there is a considerable support for manufacturing unit, the same is not seen with the IT/ITES businesses as they face regular challenges with banks. Since IT/ITES business are light on assets and banks usually don't extend funding in these cases. So probably he's talking of collaterals.
Yes, madam. It continues to remain an issue, especially related to IT and ITS companies, because the basic benchmark financial norms are to be met to enable the case to get sanctioned. So it continues to be an issue, but SIDBI has launched an asset-light scheme under which we have tried to modify the basic norms without actually compromising on the quality of the appraisal required. So we have done the IT and IT related projects in the past. We have covered those projects under asset-light scheme of SIDBI. But yes, I do share the concern of Mr. Singh. Yeah.
Okay. Another question is on how does one avail limits under the funds of funds?
Under fund of funds.
Yeah.
Yeah. Basically, fund of funds is operated again, as I told you, there's a mother fund and the daughter fund. Like SIDBI manages the fund of funds. SIDBI invests in daughter funds. Those daughter funds then multiplies itself and creates a larger volume of structure, and we have to basically apply to those particular daughter funds to be eligible to be covered under that particular scheme. Since this particular activity is not covered under direct credit, so at branch level, I have got limited access to it, but certainly there exists an architecture wherein wherein those particular eligible proposals are covered. I again request the entrepreneur to please go into the SIDBI website and get in touch with our venture capital vertical. Yeah.
Okay. So I have a question from Mr. Gurunath Joshi. He says we are scaling up non-woven fabric manufacturing by importing machine from Turkey. This fabric is used for masks and PPE equipment. The cost of the equipment is rupees 2 crores. So would you please suggest a best policy for them to help them with the loans?
They are basically going in for expansion plan to manufacture what? What is the product, ma'am?
Basically, fabric. This fabric is going to be used for masks and PPE equipment.
Uh, Actually, this would have been eligible for SAFE under the SAFE, but the quantum of assistance they would have got is only 50 lakhs. But and the entire allocation of funds is already utilized. So we have got other schemes also. As I told, it can be covered under Pratham. Pratham is one of the scheme which maybe I missed out on. It is more or less on the same lines as Speed and Speed Plus, wherein also we finance 100% of the cost of the machine based on the requirement of fixed deposit and works on the same parameters as that of this Speed and Speed Plus. It is meant for those cases wherein the supplier of the machine is not covered under our OEMs, original equipment manufacturers, with whom SIDBI has a MOU. So to cover those particular cases, we have got a scheme called Pratham. I think the entire 100% cost of the machine can be funded, subject to the compliance of the benchmark norms of the scheme.
Okay.
This can be covered.
Plus another question, is there any provision for service enterprises? We have a lot of schemes for the manufacturing unit, but many people are
services, in fact, depends upon the kind of arena we are working upon. Although we have tried to cover that retail loan scheme, which I told RLS, which was to cover the stockist and the franchisee operators and the wholesale traders also. So we have got scheme for particular services sector also. Depends upon the kind of activity which we are engaged in. Even hospitals and your hotels and the restaurants and your various other activities which are basically light on asset creation, but still services sector, they have particular schemes for services sector.
Okay. So I'm going to take up the question from Mr. Augustine. He says he's based in Mumbai with Swiss Bank as a director, and he would like to know how they can work with SIDBI in schemes related to poverty interventions. So I think I'll share your number with Mr. Augustine, and maybe he can connect with you and have an offline chat, because it's not really related to MSMEs. So I'll skip that question.
He can get in touch with me, and what I understand, Mr. Augustine, is that you are basically into microfinancing activities. If he is into microfinancing activities, then SFMC, that is SIDBI Foundation for Microcredit, that is there. They can always come in. Again, that is an activity which is not handled by branch office. It has to be handled by the head office. So he needs to get in touch with the Mumbai office, head office, and Lucknow office for further details, and also can go through the website.
Okay. And again, a question related to IT companies. It's a simple question. What is the process for IT companies for the MSME loan? So I guess you have covered it. In case you want to add anything more to it.
I think we have covered it previously. SIDBI has financed IT and IT related activities previously also under asset light scheme, and that particular scheme can be made applicable in case of all eligible proposals. And since it is light on asset, the requirement for fulfillment of benchmark financial norms become important. Again, it again depends upon the viability of the project. The viability, the viability parameters are to be examined separately. So as such, there is no bar. They can be covered. These particular activities very much covered under the line of credit.
Okay, I think I've taken up this question, but it's from somebody else. They are a startup registered with DIPP and MSMEs. They have not availed any loan facility, so neither nationalized banks nor private banks are willing to help them, though they are registered firm. So how do they go about it? Should they approach SIDBI directly? And
this is for COVID-19 related activities. Is it? Is it related to the expansion plan, or is it related to the?
it has not been specified, sir. So I think we have put up your contact details. So Mr. Sushil Bora, probably you can get in touch with the SIDBI office for more
At this
clarification.
point in time, what I can tell to Mr. Bora is that if you require assistance under that particular emergency line of credit, and there is no outstanding as on February 29, 2020, for any banks or financial institution, then it becomes difficult to cover that particular proposal under that loan. So there has to be an existing liability as on February 29, 2020. If he talks about, if he requires anything for the expansion plan, obviously it can be covered under general lines of credit.
Okay. So, sir, I think more or less, Mr. Bora has clarified he's into automotive sector. Sir, I think more or less I've taken all the questions. I'm just scrolling up to see if I've missed out on any. So, sir, yes, more or less we have. There is a question on soft loan details. Ms. Neenal wants to know soft loan.
Soft loan.
Yeah, probably I think she's into food business. So.
Wait, what loan she wants to know about? Soft loan.
Yeah.
What does soft loan refer to?
I'm okay. So
hello, sir.
Yeah. Hello.
Yeah, so actually, I just want to know: is there any scheme for soft loan for MSMEs? Because it was mentioned in the introductory part for this particular session. So, soft loan for MSMEs.
Madam, soft loan normally is a part of Smile loan. See,
Okay.
Smile I referred during the course of the discussion as one of the funds which, as on date, is completely exhausted. The soft loan is basically a part of Smile loan only, wherein it also caters to the part of promoter's contribution which is required under the project. 10% subject to maximum project cost of 2 crores. That is 20 lakhs of the soft loan can be given to a particular project. But as I told, the Smile loan is already exhausted as on date. The concept of soft loan is also not there. But then, depending upon the gap, if any, the proposals are taken and analyzed.
Okay, okay, thank you.
So, for the benefit of all who are present here, the chamber has undertaken another study in the unlock phase 1. So we are trying to understand the problems faced by everybody as you start your operations, and if we could help you in any way, we have already put up the link. So request everybody to copy the link, and at your leisure, please fill in this form. It has just 10 questions to help us understand the kind of problems you're facing in the phase of unlock 1. So this is for the benefit of our participants, and I think we can conclude the session here. So thank you everybody for posing your questions and interacting with us. We will make this video available on YouTube after a couple of days. Manish Kumar ji, आप आए हमारे members से आपने interact किया, so we are grateful to you for sparing your time, and I hope we can take this forward. We will share your contact details with our members, so in case they have queries, they may get in touch with you directly and see how we can help each other. So thank you everybody for participating in today's program.
Manish, thanks a lot for giving us an opportunity to interact with the members. It's a great honor. Thanks, ma'am.
Thank you, sir. Thank you, everybody.
Thank you.